Hello everyone, welcome to just a daily review. Today was a pretty good day. I want to just review it, talk about what I saw. Sorry for the bad mic. I realized that, well, I'm out of the house and I don't have access to my microphone, so the audio is going to be not as good, but it's okay. Yeah, this is the daily chart, and obviously we've hit the IPDA 60-day look back lows. There's nothing else really to go hit but the highs. So this is a condition where I'm not very bullish. I believe we had a quarterly shift. So the only thing I can really see is a retracement back to equilibrium. Just so that the interbank price delivery algorithm can price in new lows within its 20-day, 40, or 60 days. So I want this week, it's the last week of the month, just to consolidate a little bit. I'm not really trading anything this week. I'm gonna try and look for something on paper for Tuesday and Thursday, but other than that, you shouldn't really be trying to do much on weeks like this. I have a very sore throat, so apologize if I clear it too often. But yeah, retracement, consolidation doesn't really matter to me, but today we obviously saw it start to go a little bit higher off of that daily order block that I've had on my chart for a couple weeks. And again, we're the last week of the month, so it's normal if we start to see a little bit of retracement. Anyways, I don't know why it's okay. So this is what I saw in the morning. I took it from the web Discord, so it's a little blurry, but that is in the morning at 8 a.m., 8:02 specifically. I'm looking at a triple top formation. Now, I'm not showing an arrow or anything saying that this is the gap that's going to resist price and send it lower. It can, for sure. I'm highlighting that gap because I think it's an important gap. However, you see it's spending a lot of time in that gap. It's waking from it, and usually I'd want to see price keep going, but instead it came right back. It seems to be coming back to it. The 5-minute chart looks pretty bullish. It's coming off of this order block too, very aggressively going higher. So the down close candles seem to be resisting price, or supporting price, sorry. And that's not really good when you want to see lower prices. You don't really want to see these gaps get filled too much, and unless price is just super volatile and it's moving around a lot. So it's also not really the right time. It's only 8 a.m. We haven't even hit 8:30 yet, or 9:30 open. So we can still see a Judas swing before making our run lower. But that new week opening gap, I was wanting to see this act as a magnet. That's why I have the magnet there. And there's a little bit of space there that has literally seen no trading whatsoever. And that's what I wanted to target for the morning. Once we get down there, I don't really care what happens afterwards. But the honestly, the best delivery was once we filled that new week opening gap. So once we get down into here, we form a low. This is after 9:30 open. And notice how the bodies are still respecting that 15-minute bearish fair value gap. But what's happening here is it's very, very hard for price to continue finding more resistance. It seems like it keeps coming back. It's having a lot of trouble finding resistance. It's wicking above the highs. It's filling these gaps completely. This is a scenario where, okay, obviously it's going down for a specific reason. It's to balance out new week opening gap. But it's much, much easier for it to go higher. It's pretty obvious here that the bullish fair value gaps, don't even get traded too. So price was a lot more bullish. And I was looking at the dollar, and I wasn't really seeing anything too bullish for the dollar. And I didn't check for SMT. So there could have also been SMT, but I forgot to check when I was doing my review. I was just looking at the NASDAQ. So I don't know if there probably was SMT, but yeah, just note that the 9:30 open made one more quick run above the triple tops, and on the hourly chart it actually forms a nice triple top, because this isn't a 4 top on the hourly. These two highs are 1 in an hourly chart, are 1 swing high. Anyways, very, very bullish price action after that new week opening gap gets filled, and we leave a breaker these, as you can see here, and I show it on the 5-minute chart. I went too far back. Wait a minute. That's not supposed to be the 1-minute chart. This one. So 5-minute chart, we initially consolidate. I think it's pretty obvious. This is a market maker buy model. We consolidated initially around that 15-minute bearish fair value gap, and this told me, okay, we're getting ready for a lower move. After we opened up at 9:30, it came up and took out that short-term high to create a bearish breaker, right? And I would be looking for shorts as soon as we hit that short-term high. I'd be looking for order blocks, fair value gaps, whatever it is I can use to get short. And then it expands down. And also note that the 8:30 open and the midnight open, right? When we're above it, you look for sells. When we're underneath it, you look for buys. So great place to sell up here. It continues to expand until it reaches an week opening gap. It does the same thing, leaves a short-term low, trades beneath it to form a bullish breaker. All you wait for is some displacement now, and then you can look for order blocks. You can look for fair value gaps. You could have just sold this low, bought this low. Have a limit order at that low as the breaker is being formed if you want. But any ideas you want to use to go long, as soon as we hit that low, it doesn't matter what you use, but just as long as you understand the logic behind why price underneath that low is oversold and needs to reverse. And come right back to buy side liquidity, which is above the consolidation. And on the 1-minute chart, you see how beautiful this is. All right, we have the first stage. And usually there's not always 2 stages on each curve, but usually there is, and you see that nicely here. We initially drop down, and we have a little bit of a consolidation retracement-ish, more of a retracement. It doesn't get back above midnight open. I would want it to do that, but it doesn't quite reach up there, and I wouldn't really be wanting to see anything here. But second and first stage buys on this are very nice, and this is what you would have wanted to be part of. You get a very, very nice and fast price action to get above the breaker. The breaker now supports price, and we're still underneath the midnight open. We come back underneath the midnight open here to finish off the second stage. And you see we have a little bit of a retracement. This low right there is not the same thing as, it's not really forming a bullish breaker. This is just because it's a short-term low. You can use that one or this one. And the midnight open is just there. I'm just noting that low there just to say it's a second stage buy. It's not necessarily something that I had my main focus on. In other words, I wouldn't really be wanting to buy this low. But price very aggressively runs up. I would argue that the second stage delivery is probably the best delivery of the day because of how fast it ran. It went from about, if you use the inverse fair value gap, we're going to say 260, and it went almost 100 points just in the second stage. And from the first stage, you got 100, let's say 160, and you got about, 200 points. So lots of movement today on a Monday. I wasn't really expecting much, and I chose not to trade today just because there's not much news and we moved a lot. And it would have been very hard trading inside here. If I had been watching price live, I'll be honest, if I would have shorted the low of that fair value gap, price would have came up and stopped me out. Now, ideally, if I'm shorting that fair value gap, my stop should be at that high. But that would leave very, very bad RR, and I wouldn't be willing to take that short, so I would have had to buy higher. Maybe at the order block. I like to buy off fair value gaps, and when I'm bearish, I don't really want to see price fill in the fair value gaps like this. I wanted to get in there and be very bullish like it did down here, for example. But again, the bias is not lower. The bias is higher, right? Because we're Monday and we want to start maybe a retracement or just consolidate. And there's more liquidity higher, so it's harder to go lower. And we're only going lower to fill new week opening gap. So the best thing to do would have been to just avoid this. Don't try and trade this. Avoid it. Or if you want to trade it, just be more conservative. Maybe I could have used consequent encroachment. Maybe I could have sold the gap high or an order block. or maybe an inverse fair value gap here. I don't know. But then price very, very sluggishly makes its way down before it starts to completely accelerate, close to 10.15, all the way down to down here, that new week opening gap low. What I also could have done is waited until 10.07 if if I'm a quarterly theory guy, which I know the quarterly theory times, it's 9 to 9:22. Then you have the second cycle, 9:22 to 9:45, and we saw 9:45 come up and make that high, right? 9:45 cycle came up and made that high. So 9:45 to 10:07, that's the third cycle from the 90-minute cycle from 9 o'clock to 10:30. That's when price sort of starts to change what it's doing and start to deliver lower. And 10.07 would have had that one more hit down into that and then run lower. I could have also looked for a short-term high inside this fair value gap to be formed and for that short-term high to be broken up, like as you see right there, and then go short off that short-term high getting broken. Or I could have also looked for, well, anything really, any ideas. But just the main idea is that this RR is not acceptable if I'm putting my stop at that high and I'm entering down here. Technically, I can allow price to get all the way up to this rejection block, the very high wick. But on the flip side, very, very bullish. You see how price does not really want to come inside this big fair value gap. It's a very clear displacement. This is the initial displacement, though. You can see how it's not very clear displacement. This is very clear displacement, and we're clearly disrespecting some bearish fair value gaps, some good order blocks, and this is a better a time to be in a trade than anything else today, and it very quickly runs up higher to the midnight open and retraces a little bit into the order block. And that's all for the day. That's all I had for the day. Anyways, take care. Goodbye.